Good morning. It is Tuesday, January 13th, 2026. If you're looking at the S&P 500 futures this morning, you might think everything is fine. Green arrows. Mild optimism. Business as usual. You're being lied to. Look at the real scoreboard. Gold just shattered 4,600 an ounce. Silver just ripped 7% in a single session to nearly 85. Why? Because the Department of Justice isn't just investigating a bank. They are investigating the Federal Reserve Chair. The Treasury Secretary is reportedly panicking, telling President Trump this probe has made a mess. And on top of that, a new 25% tariff on anyone doing business with Iran. So here is the conflict for today. The paper illusion versus the hard asset reality. Equities are hoping for a soft landing, but the commodity markets are pricing in a complete breakdown of institutional trust. This is the pre-market pulse. Let's see who is right. Deep Dive 1. The Fed on trial and the gold rush. ETs start with the story that is melting down the currency markets. For decades, the Fed put was the bedrock of the market. Yesterday, that bedrock cracked. We have confirmation that the DOJ is investigating Jerome Powell over renovation costs, a move widely seen as a political pretext to force rate cuts. The reaction. Treasury Secretary Scott Bessent is reportedly furious, telling Trump this made a mess. And the market agrees. The US dollar, DXY, is slipping. The euro is steadying. But the loudest signal is coming from gold, ZOSD, and silver, ZAGIST. Silver didn't just go up, it exploded. Plus 7.2% to over 84. This is not an inflation trade. We have CPI data coming out tomorrow that is expected to be mild. This is a regime change trade. Investors are terrified that the Fed is losing its independence. If monetary policy becomes a political tool, the dollar loses its premium. The trade. You need to be looking at the miners. Newmont, NEM, Barrick Gold. But specifically, look at the ETFs like GDX gold miners. They are lagging the physical metal. That gap has to close. If you're holding cash, you're holding a melting ice cube while Washington fights over the thermostat. Silver didn't just go up, it exploded. Plus 7.2% to over 84. This is not an inflation trade. We have CPI data coming out tomorrow that is expected to be mild. This is a regime change trade. Investors are terrified that the Fed is losing its independence. If monetary policy becomes a political tool, the dollar loses its premium. The trade. You need to be looking at the miners. Newmont, NEM, Barrick Gold. But specifically, look at the ETFs like GDX gold miners. They are lagging the physical metal. That gap has to close. If you're holding cash, you're holding a melting ice cube while Washington fights over the thermostat. Deep Dive 2. The AI tax on hardware, RAM wars. Now, let's pivot to the tech sector. Everyone talks about how AI is going to make us rich. Today, we're seeing who AI is going to make poor. We have a massive crowding out effect happening in the semiconductor supply chain. Nintendo, NTDOI, and Raspberry Pi both issued warnings in the last 24 hours. The problem? RAM prices. High-end AI servers from NVIDIA and Meta are sucking up every available memory chip on the planet. Nintendo says high RAM prices are hitting their margins for the Switch 2. Raspberry Pi says memory costs are eating their profits because supplies are being diverted to data centers. The pivot. Meanwhile, Meta is aggressively dumping the old world to survive the new one. Reports say Meta is cutting 10% of its virtual reality staff to fund a new initiative called Meta Compute. They're building gigawatts of AI infrastructure. Zuckerberg is effectively admitting the metaverse is on hold. The AI arms race is the only game in town. What does this mean for your wallet? 1. Avoid consumer hardware. If you make gadgets, Nintendo, Sony, HP, your costs are skyrocketing. Margins will get crushed. 2. Buy the memory. Micron, MU, is the kingmaker here. They have the pricing power. If Nintendo is crying about prices, Micron shareholders should be smiling. 3. The Vera Rubin trade. NVIDIA and Eli Lilly just announced a joint AI lab for drug discovery. The convergence of biotech and infotech is the next megatrend. Watch Eli Lilly and NVIDIA. The silent mover, Lithium, wakes up. While everyone watches gold and AI, a dead sector just sat up in its coffin. Lithium. For 2 years, lithium has been a disaster. Oversupply, crashing EV demand. Today, Albemarle, ELB, and Lithium Argentina, LAR, hit new 52-week highs. Why? Scotiabank just dropped a massive double upgrade. They're calling this the first leg of a multi-year tightening cycle. Despite the headlines about EV slowdowns, the actual demand for batteries is quietly stripping supply. Scotiabank put a 200 target on Albemarle. The signal. This connects to the Iran tariff story. Trump just slapped a 25% tariff on nations doing business with Iran. That creates geopolitical friction for oil. If oil gets messy and the grid needs storage, batteries are the answer. The green trade isn't dead. It was just hibernating. If ALB breaks resistance here, the squeeze on the shorts will be violent. Let's translate the noise into 3 specific tickers. Rapid fire. Ticker 1, Micron. Verdict: bullish. Why? The Nintendo and Raspberry Pi warnings confirm it. Memory pricing power is back. The AI demand shock is real, and Micron is the toll booth. By the shortage. Ticker 2, WBD, Warner Brothers Discovery. Verdict: avoid/hold. Why? Yes, they won big at the Golden Globes. But Paramount, PSKY, just sued them to block the Netflix deal. It's a legal mess. You don't trade lawsuits. You trade earnings. Too much drama. Step aside. Ticker 3, GD, General Dynamics. Verdict: bullish. Why? They just won a nearly $1 billion contract for U.S. Navy modernization. With Iran tensions escalating and tariffs flying, defense spending is the only government line item that is guaranteed to grow. Here is your playbook for the next 24 hours. 1. The CPI trap. Consumer Price Index drops tomorrow. If it's hot, combined with the Powell investigation, the bond market could riot. Watch 10-year yields, US 10Y, closely. 2. Gold fever. Don't chase the spike, but buy the dip. The trust crisis isn't going away in a week. 4,600 is the new floor, not the ceiling. 3. The memory trade. Watch MU and SK Hynix. If tech hardware stocks fall, rotate that money into the chip makers squeezing them. The news is chaotic, but the charts don't lie. This is the pre-market pulse. Trade safe. If you like our content, remember to hit that subscribe button